Hey everyone, it's Tom Kradza. On this episode of the podcast, we're trying to introduce you to just a different type of investing strategy around real estate. We ran into these guys. This is Greybrook Realty Partners. I don't know. I feel like 6-7 years ago. I could be off. 5-6-7 years ago, something like that. And they presented a way to invest side by side with developers, as they'll explain on the podcast. So this isn't some big pitch for Greybrook by any means. The intent of this is just to share what other people in Toronto are doing and how they're lining themselves up with developers and investing in development projects this way, and how you can participate in these things if you so choose. There's different qualification criteria in Ontario, and they can explain all that stuff if you ever reach out to them. So really the intent, I just want to be super clear, is just to share a different investing strategy that you may or may not have heard of. Some people ask us if there's ways to invest into real estate using your RRSP, and these are one of the ways. So hopefully you take a bunch of good information away from this. Dylan and Darcy are good guys. We chatted about all different things, Toronto real estate investing in general, actually all over the Golden Horseshoe. So hopefully you enjoy that. And listen, if you are listening to this and you want some specific strategies, you can get free copies of our books. We sell these books on Amazon, but there's no need to pay for them. You can go to rockstarinnercircle.com/books. That's rockstarinnercircle.com/books. And you could download free copies of our books. We have the one that's been downloaded the most has been Income for Life for Canadians. That basically started the whole business, which outlines some different investment strategies. We still get that one downloaded a ton all the time. So that'd be the place to start. But there's actually 4 books total now, not 3. The Real Estate Investing Blueprint is our latest one, which we put a lot of work into, a lot of good information into that book with actual examples of different things that we've been doing over the years. So you can get a free copy of that book there as well. So you can get copies of all 4 of the different books that we have available now for free at rockstarinnercircle.com/books. And with that, let's get on with the show.
Are you ready to live life on your terms? Is it time to take charge? Real estate, business building, the economy, health and nutrition, and more. It's the Your Life, Your Term Show with Tom and Nick Kradza. Are you ready? Let's go.
Hey, Nick, can you hear me?
Nope.
All right, we're perfect then. So Dylan and Darcy are here from Greybrook Realty Partners. Am I saying it right?
That's it.
Greybrook Realty Partners.
That's the one.
Okay, so Dylan, we're going to
This is very corporate. Usually it's like entrepreneurs.
I know. It's Greybrook
very
Realty
corporate
Partners.
now.
So it
Yeah.
does feel.
Why? Because I'm wearing a dress shirt?
Are you good? Yeah, that too.
That's definitely.
Can we hit you guys up for sponsorship of this episode? We should try to do something like that.
Yeah. Why did you guys look at each other there? You should be looking at us when
what should
you
we
answer that
say?
question. We would like millions of dollars in sponsorship at the beginning of this podcast. Anyway, listen, we have a question for you, Dylan, first, and then Darcy, we'll get to you.
Sure.
You raced, because Darcy told me this about you, Dylan, that you raced Michael Phelps because you're a swimmer.
Yeah, so I was a...
Don't hesitate. You're like hesitating and like mildly embarrassed.
I think if people were to witness the race, racing might be putting it positively for me. But yeah, technically,
see, I don't buy that. I feel like you're humble because you're 6'4". I feel like those arms can propel you through water.
Yeah. So I swam, university and in Canada obviously as well, and did race against Michael Phelps a couple times at a meet in Quebec a few years ago, but
he's not as good as all those gold medals make him seem, right?
No, he's he somehow, like, I think we're the same height. I think he's 6'4" and I'm 6'4", but he seems like he's like double the size of you in person.
Really?
I don't know how that works.
Did you just chirp him when you walk by, like, dude, I'm gonna eat your lunch right now?
No, not exactly. No.
Yeah, he must have just dominated the pool.
Oh,
the
yeah.
day. Like everyone's looking at Phelps.
Oh yeah.
Yeah, that's an A-type personality, the king of the jungle walking in there. This is my territory.
He's got the old Tiger Woods effect. Well, I guess it's the Michael Phelps effect, where people are just like, "Oh, Phelps is in the race. This is trouble."
Yeah, it probably like doubled the attendance of that meet that year. Like people just wanted to go and race against them.
So do you remember what place you came in? We don't have to talk about the place.
Oh, I don't know. Probably, way back. If it wasn't televised, but I like to describe it that if it was, I would have been one of the people that faded off screen. So
who's that guy on the far left of the screen?
Yeah.
Oh shit. Okay, and then I guess. And at Graybrook, what's your do you guys have titles at Graybrook? What's your role there?
We do. So Darcy and I are both on the private capital markets team. So really our day-to-day is dealing with clients, helping on the raising of capital side for our different projects, and really just educating and talking to people about the various developments and projects that we have on the go.
Okay, and that does sound very corporate, Dylan. You're right, but that's good. And then Darcy, you played hockey, and I remember and the reason I like bringing this up is we were just making fun of Babcock and his decision making in the playoffs. It's still not out of my system, even though it's so long ago. So, is everyone at Greybrook? You have to be some is it like mandatory that you're like some ex-athlete of some sort?
Yeah, it's
that
part
like
of our
hiring
HR policy.
Yeah.
You gotta, on your resume, it's got to be, we got to see what level sport you played and what sport you played.
Got it.
Day one training camp. Yeah.
Is that an HR violation?
That's a total in Canada. That's massively for sure. I don't know what the rules are, but I just
don't worry. Our HR department's fine. It's a tray in my office with a bottle of vodka and tequila on it. That's what we call the HR department.
You know what? Don't worry, guys. We're not that corporate. You don't have to forget. It's funny because our Christmas party, there's an athletic component. Like we have these big sort of day-long things where it's like breakfast, athletic component, or like escape room.
Component. I feel like there's
So a couple of years we did trampoline dodgeball, and then another year we did
pre-alcohol or post-alcohol.
Pre.
Oh, okay.
But because there is a few former athletes, it can be competitive, right? But then there's a big blend. Like we have 60 plus people at Greybrook. So obviously, as much as we like to say everyone's athlete, definitely there's a blend, right? People never.
I see, because Dylan
that's
seems very
get
humble
intense.
and nice. I feel like he won't
intense.
smash anyone. I feel like you're gonna just jump there and smash somebody.
I'll only smash guys that try to smash me. You know what I mean? Like I'm not just gonna smash anybody, but if guys want to compete hard, then I'll try and.
You should compete against Nick then.
Remember when we went?
Yeah.
So we went. The workout. I was surprised at what kind of workout it was. We were all like just covered in sweat by the end of it.
Because we're like 8 games in or whatever.
And there was two people left. Me on one side and our property manager on the other side. This girl that was 5, 6 young. I was younger at the time too, so she was kind of young. And I jumped and kind of faked her.
She's
and
also
I just
felt like a foot shorter than
you. And I just jumped, faked her, and I just drilled her. I'm like, I don't care. I want to win.
As you yelled, you just drilled
Look,
her.
we either win or you lose. Okay, there's nothing in between.
I feel like she was like pregnant or something too.
Tom's still upset because he was on the losing team, so that's why.
No, I don't think I could play. I tore my Achilles. I don't think I even played. I was just like the sideline as with crutches. Yeah.
Well, there's certain guys that are competitive, like very competitive, but not most of the former athletes have kind of toned it down a lot.
Yeah, sure. Anyway, okay, so let's to circle it back to Greybrook. I guess the reason that we crossed paths with you guys is Nick and I stumbled into Greybrook. I forget actually who made the introduction.
It was Rav.
Oh, that's right. And we went to go check them out, and we asked you guys a whole bunch of questions, and Peter and Sasha as well. Mm-hmm. And can you guys just describe? I mean, either one of you describe like what does Greybrook do? Like what is your business model from the investor perspective? So someone like myself, what do you guys offer?
Sure. So as we define ourselves, we're a private equity group or an asset manager, real estate asset manager. So to sort of describe it in simple form is we're joint venture partners, not dissimilar to, an investor being a joint venture partner with a, single person on a detached home. We're sort of joint venture partners with very large scale builder developers. So, the biggest best in class sort of home builders or high rise builders in Greater Toronto area, Greater Golden Horseshoe. We joint venture with them on a project by project basis. So whether we're building 70 townhouses, 200, detached homes, 1,000 home community or single or multi-phase high rise on a project by project basis, that joint venture, we then go out to our investor base and re-raise our portion of the required equity. So equity effective is cash to joint acquire the land alongside the developer partner, and then complete that given development through to completion. So through sales, marketing, construction into completion, and then we split profits with our developer partner on once the project is completed. So basically, we're joint venture partners of very large scale, and I think one of the very unique things about what we do is, typically you can only access real estate investing, really one of 3 ways: your principal residence, or you have a rental property or condo or house, or you could buy a public or private REIT, right? A real estate investment trust. It's very difficult to access the asset class of development with a relatively small investment size, right? So development has really been controlled by, a select few, call it 20, 25 families in Ontario. because it's very capital intensive, takes a lot of money to get into the development game. And it's a hard thing to do. So I think, one of the unique things that we're probably most proud of is the fact that we've sort of opened up the opportunity to people invest in the asset class being development with a relatively small check size and almost anybody can access it in the way we do it.
Yeah, and that's kind of what surprised us by learning about you guys, because we had heard of people kind of sort of believing they were investing in development projects by doing like some syndicated mortgage type investments.
Sure.
And I'd never heard of your model, which is completely different, where and correct me if I'm summarizing this incorrectly, but it feels like to me that when I invest with Greybrook, what I'm doing is I'm investing with the developer. So a corporation is, maybe I'm going to summarize it too, maybe make this too simple. So just correct me if I'm wrong, but I'm buying a share in the corporation that is going to purchase this land and develop the land. So I'm actually part owner of who's owning this development project. Is that too simple?
Yeah, effectively that's it. So each project is called a limited partnership, right? So a limited partnership is just a legal entity. And our investors would ultimately be unit holders in that limited partnership. And so that limited partnership then joint ventures with the developer, and then we joint own that land. So in theory, yes, you're sort of an indirect beneficial owner of the land, and then the profits that are ultimately generated from that development.
Got it. Yes.
So it's almost like a shareholder in a
okay.
way,
And
right?
so the benefits of that is that I have a question about the developer in a second, but the benefits of that is then I get to access the profits directly, just as the developer is going to access the profits at the end of this thing, like whatever my share of that is, however it's cut up. The negative is this isn't like a cash flow type investment. It's not like I'm getting returns on an annual basis. If you mentioned like building 300 homes or something like that, if it's a subdivision or a condo, it might take 3, 4, 5 years to develop. I get nothing for 3 or 5 years. Once the profit is kicked out at the end of this whole thing, I get whatever share of that belongs to me based on the amount of money I've invested into this thing.
Yeah, it'd be a lump sum on the at the end on completion.
You got it.
And so that is true. Like sometimes, we were just talking about listening to podcasts earlier, and there's a lot of research, and a lot of guys are starting to talk more about, people talk about liquidity, right? The ability to sell a stock at any point in time, press a button and sell it, and saying liquidity trades at a premium. It's a valuable thing, but sometimes behavior gets in the way. And people make bad decisions, right? So actually, even though you can't just sell out and there's not cash flow intermittently in our development stuff, oftentimes the fact that it is illiquid and tied up for a period of time, that time is really what's creating the value in an investment. And so as much as it's painful for people to not be able to access their funds at times for 2, 3, 4, 5, 7 years, it's really that duration that is creating the value and ultimately generating the return. So in a way, it's almost like a blessing in disguise for people. Although sometimes it's a counterintuitive thing and some, uncomfortable for people, it really is a blessing in disguise, because there's no way to develop, to generate substantial returns in a development in a short period of time. It's a very difficult thing to do. It takes time, right? So illiquidity is actually your ally in many cases in what we do.
Yeah, and I think everyone knows. I mean, getting into that type of investment, most people they're aware of that. You know what I mean? They're not thinking that they can get their money back at any time, and they're not using, or at least I would hope. And I guess no, there's things in place, so they're not using the only $5,000 or whatever $20,000 of savings that they have. No, definitely. So they can't get in. So, but yeah, I agree with you. I agree with that completely. And I think, like you said, it can prevent from, especially from some people, they might be their own worst enemy by making just emotional decisions every time they read a headline or something changes in the economy, or whatever. They go into panic mode and make changes either positive or negative because they hear something, right?
Yeah, absolutely. And you guys would know better than anyone, like the headline risk in real estate is like nothing else, right? Like it's just one day it's incredible, the next day the sky is falling, and because everyone,
because the headlines sell, because the real estate headlines are sexy. I think they sell papers and
for
get
sure.
clicks
definitely.
still, right?
Well, because half of everyone listening wants the real estate market to collapse so they can tell their neighbors, I told you so.
Yeah,
and the other half wants it to go up so they can tell the neighbor on the other side, I told you I was right? So it's just it's the ultimate battle.
Yeah, except I said sell papers, and I don't think anyone's selling papers anymore.
Yeah, fair.
Get clicks.
But the thing too, I think, is everyone to some extent is invested in real estate, right? So whether you have a home
That's
or,
true.
or,
So we can all
or
argue about it.
secondary property, or you're in development, like to most people, it's all the sort of same, when it's all very, very different, but everyone's invested to an extent. So everyone's got an opinion, and the headlines do affect everybody.
When I'm curious, because I know how I am. And when you guys are at like a party with friends, or just like a backyard barbecue with friends that know what you do, because you're in, in this kind of world, this real estate space, do you guys get asked just unlimited amount of questions about different developments and what the real estate market is? What do you think it's going to do, and all this type of stuff? Do you have those conversations regularly, or do you kind of shy away from them?
I think it's based on the people you're around, right? Like my family, not so much. Some people definitely a lot more so, like people that are in the industry and friends. And yeah, it can be anything, right? How's the market? What do you think of the market?
Some of your friends are just waiting for you
It's
guys
an
to
easy,
lose everything
Oh,
with them
yeah.
for sure.
It's an easy small talk conversation, I think, for some
Okay,
people.
I want to go back just to the project itself for a second. A lot of times I'm asked when I try to explain what Greybrook does is who's the no one's ever really heard of this type of model before. Do you guys a lot of people do this kind of stuff? I haven't seen it a lot. Are there competitors?
Well, I do think, first of all, it's a ridiculous thing to say if you say there's no competitors, because obviously there's competitors. Everyone's thought of every idea.
Yeah, Tom.
But so I'm not saying Tom said something ridiculous, but anyways, you get the point.
No, that would be valid. It's good.
No, like I think that we have created something quite unique, like we talked about earlier, in affording people the ability to access on a project by project basis development with top tier developers, because otherwise it's really privately controlled. Like I think the question, is probably best asked, like where do developers otherwise get their capital if it's not through Graybrook?
Okay, and that's what I was leading to. Like, why are developers doing? Like, why would a developer do this? Like, why wouldn't the developer just say, "Hey, I'm going to make a killing on this condo project in downtown Toronto.
Yeah,
I'll just do it myself."
So there's a couple of reasons, and there is competition, but I don't think it's in direct form necessarily. Like there's smaller players, and then there's institutions, and there's
bigger
competition
money.
for
I
what's
get
going
it.
to developers. So no question. And then there's also funds, which we're not. So there's that. In terms of why developers don't do themselves, like I think there's a couple of reasons. One is that, we were talking earlier before we got online, is just that land generally has become more expensive, right? Across really the GTA, Greater Golden Horseshoe. And so, the partners that we work with, most of them are what's called vertically integrated. So, they employ the trades themselves, and they also have land holdings to develop today, tomorrow, 5 years, 10, 20 years out from now, right? So if land's getting more expensive, even if you had $1 billion in equity, right, which most people wouldn't have $1 billion kicking around, and if land is costing, $1 million to $2 million an acre, depending on where you are, even 500,000, and you're buying hundreds of acres, like you're going to chew through that pretty quickly. So a lot of these builder developers, one, we give them a higher return on their equity, right? So that's an important one.
Because they're putting less down on the project.
Correct.
So they can leverage themselves across multiple projects.
Correct, right?
Okay.
And which gives them the ability to then buy land out into the future, 10 years out, which is not land that we're going to be joint venturing with them on, right? That's land that they're going to hold, develop, and get closer to build ready. And so it gives them that ability to keep to scale ultimately. So higher return on their equity, the ability to scale. And then, outside of the financial commitment, and one of the things that I think is often sort of not well-defined in maybe our marketing material, or, love our marketing team. They're great. So that was a bad thing to say, but maybe people don't pick up when they look at our website is we're not just a financial partner. So yeah, we do provide, equity financing to a lot of these guys, but we also are a genuine developer partner, right? Like we bring a lot to the table from a development perspective. We have a full asset management team in-house at Greybrook, which are all former developers themselves. So a third of our team are guys in models, working with banks, lenders, sales, consultants, architects, planners, really to drive success of all these projects. But we actually bring a lot of skill and a lot of expertise to our partners, which they appreciate. And I think is what really allows the model that we've developed to be sustainable, because it's not just capital, it's expertise in addition to capital.
I'm shocked that you think a developer listens to your opinion on stuff. I'm like, no, that's
taken a
amazing.
while.
That's
It's taken a
amazing
while
if
to
they
get to
do. I just, from our experience with our father's construction business on a much lower, smaller scale, being one of the subcontractors under the general contractor on a condominium development, I found that developers were the kings of the world, and they would just not listen to anyone because they had all the right answers. So
I think it takes time. So
but
there's
you
still probably a
got it.
It's
You
a big
guys-
ego business, that's for sure.
Yeah, totally. But you said something interesting that I never considered. I always thought the attractiveness of what Greybrook does and what you guys do is that if I, the developer, put up 20% now, and that Greybrook will raise the funds to fill the other 80% necessary to do a new project, I thought the developer could then. Me, the developer, I like that because I could take the rest of my money and do 4 other projects. So instead of doing one project, I'm doing 20% down on each project.
Sure.
But you said something interesting that it's allowing them to keep the machine working because they can take some of their money and acquire land that they're going to develop in the future. So kind of they're using it almost to build the pipeline and to keep everything flowing.
Absolutely.
Not to do multiple projects at the same time. It's more just a allocation of their capital, what they're doing with it. They don't have to tie it all up into one project.
Absolutely.
Yeah. And they have a very unique timeline too, right? Where they're, most people's timeline is today, 6 months from now, 5 years from now. They're buying, in often cases intergenerationally, where they're buying 5 years down the road, 10 years down the road, sometimes 15, 20 years down the road. So to tie up capital for that long.
Holy shit. So as you get to know these guys, do you see where they're buying for 15, 20 years down the road?
Absolutely. I think it's
I feel
pretty,
like you guys are staring at each other again. Like
Insider
I
trading.
don't know what we could say and what we can't say.
well, that's one of the things that we actually say. You talk about insider trading is like, because it's private business, it's a difficult thing to navigate approvals, planning, is relationships.
Oh,
and these
gosh,
guys are
yeah.
very good at what they do, right? But is that there is a component of like legal insider information almost in development, because certain relationships are stronger than others. Certain maybe counselors guys have different edges with, right?
Yeah.
So there is a component of knowing information that other people
and just
don't
a
know.
developer
And there's
doesn't
bigger-
want the other developer to know.
I
So
was
one
just gonna say
developer,
that, yeah.
they don't want to know I'm building something out in the Niagara region. So
or
they're
the
gonna-
land that you're acquiring. So because maybe they're after looking at the same piece of land and you're trying to figure out a way that you can get your hands on it before they do.
A bunch of stuff, like for sure that, just negotiating a piece of land that you want, they don't. But, oftentimes it's actually to their benefit to be in landowner groups. So if there's a group of land or a big block of land that's going through approvals, more in the secondary plan,
More clout.
they want to be together because they all want the same outcome, right? So it's competitive, but it's also clubby.
Yeah,
in a
that
way,
makes
right?
sense.
got
That makes
it.
perfect sense. And is why you see so many of them when they're lately even put their sales centers together, they're going for approval. So they're just like you're saying, just to kind of get, they plan it together because they can usually try to push through more things.
That's right.
If there's just power in numbers when they own a bigger piece of land in whatever municipality, right?
Exactly. Like think about it. If there's resistance in a landowners group, it's not going to be from a developer that wants to develop. It's going to be from a farmer. And like, it's not all right at all costs what they do. So I'm not saying that. I'm just saying that, the resistance is going to come from someone that's lived there for 30 years and has no intention of selling their farm.
Mm-hmm.
The resistance is not going to come from the other developer that wants to build the land, right? So they're better off being together in most cases.
And then just back to the risk to me, the investor, for a second. The risk to me, because everything I've seen come from you guys so far has been really top quality stuff. It's been like condos right in the downtown core, or in Yorkville, or subdivision in Kleinburg or Cambridge, like really kind of good location type stuff.
Sure.
So I guess the risk to me is that I say, okay, guys, I'm going to put some money with you, with this type of investment. The risk is the development does not proceed. To me, that's the way I'm thinking about it. I'm asking you to correct me if I'm wrong. The risk is the development's like, oh shit, things didn't go as according to plan. We're not going to develop this. Then what? I'm left stuck owning this piece of land or this development site.
Sure.
Is that what I'm left with?
Yeah. So we're regulated, right? So we disclose all the risks from,
I get it. I'm just trying to
all the
cut
way
through all that.
Yeah.
shit.
So I think at the end of the day, you're we like to call ourselves sunset buyers, and yeah, it sounds great. In theory, the day the sun sets on the day we buy, the land is worth, we feel like we could sell it for more than we bought it for, right? So at the end of the day, if you're using responsible leverage or no leverage at all, acquiring a site, and you feel like you can sell it tomorrow for at least what you bought it for, then as long as, you know, you don't have crazy financing costs.
Yeah, got it. Because there's no leverage component. You're raising the money, and then that's bought cash with the money.
So in most cases, not in every case.
Okay.
So, you know, we just assume that could you sell the land for tomorrow for what we bought it for today? If the answer is yes, then I think you're in a pretty good spot, right, overall. And you know, at the end of the day, like, we feel like the biggest risk that investors should be aware of is, and as we've seen through 17 and 18, like markets can be volatile, right? So there's going to be ups and downs. And as long as you're in markets where over the medium to long term, you feel like there's an upward trend, then if you have the ability to wait through that upward trend for when a down market comes back up, then you're in a pretty good spot. And so that just dovetails into sometimes the projects can take longer than we anticipate. Obviously, we want to project timelines on time or sooner and on budget or better, right? But, you know, one of the biggest risks in development unequivocally is just that timelines extend, right? And so investors need to be comfortable with that.
Yeah, got it. And then I guess, could there ever be a situation where, I guess you guys there's been no delays in projects, it seems like, since 2007 or 2008. Or I guess there have been some in different one-off projects, but not across the board. But I guess I'm just thinking of the worst case.
You
again.
mean when you say delay? There's been delays in almost everything. You mean closing? You mean things where they really like pull back on sales, shut down sales.
There's like a deep recession, and we're like, damn, the sales office closed the freaking doors.
Yeah, no, I'm just thinking for anyone listening, they're going to be like, what are you talking about? I bought pre-construction is always delayed. There's nothing on time.
You're right. Bad language. Thank you. I just mean a serious.
That's what I'm younger brother. That's what I'm here for.
Yeah, my younger brother does it all the time.
I'm thinking bigger picture. That's why my language. That's why I'm. But so when the recession hits, I guess there could be a cash call, because on that project, not to lose it, there's going to be property tax. There's some cost just to carry this thing, even if the development. So you guys might ring up investors at some point saying, hey, to not lose this site, we're going to need to put X number of dollars just for like property taxes or something. Correct? So, but that, to me, the investor is not a bad thing, because if I'm sold on the site, I'm like, yeah, no problem. I'll do that.
Yeah, so there's a couple things in.
I'm only focusing on this Darcy and Dylan, just so you guys know, because this is how Nick and our brains, we just automatically always go to worst case situation.
For sure.
Yeah.
No, it's good. Like, at the end of the day, your investor, great. My upside's awesome. That's
I'm just always thinking, what's the worst?
What's the
my
downside? Right? Like the classic Warren Buffett, don't preserve your capital, right? Don't lose money. That's investment sort of advice.
Yeah, is that what he says? I didn't even know. Okay.
I think he's done a pretty good job.
Yeah, he's done good.
So in our agreements, we can't call on our investors for additional capital. But if that's per the agreement. So there's no capital calls, in any of our developments. However, if the development is in need of additional funds, then it's our developer partner's obligation to put up those funds, but they will have to be paid back in some way, right? So if the timelines do extend.
Yeah, got it. So it might eat into the profits at the end or something. Yeah. But okay, so there's some contingency for that to be met.
But you know what? Like, one of the things that I think is a very interesting point, and as you're in development for a little bit longer, most people want to be, to our point earlier, in short-term projects, right? So they want to be in a 3-year project where you're buying the land that's ready to be built, so shovels in the ground the next day effectively. You're selling homes, building them, and you're getting a profit. Call it 2 or 3 years. The reality is those feel like the safest projects, right? Because it's short term and it's relatively predictable. But if 2017 happens and the market goes from 100 to 80%, right? And you're in a short term project, you're actually more vulnerable in a shorter term project in most cases than in a longer term project because of this volatility. Where in a short term project, what you're doing is you're sharing in the cost to build and what you sell it for, right? So now if you sell it for less, your margin is compressed.
Okay, but in the longer one,
usually your land cost is a smaller percentage of your overall revenue. You also have a longer timeline. So as you extrapolate over a longer timeline, you have a much higher ability to outperform, and you're much less vulnerable to short-term fluctuations.
Makes sense. It's like if you bought a property down the street to flip, if you do the renovations in 4 months and then at that time the market slowed for whatever, government comes out with some more regulations, all of a sudden you're in trouble because that your timeline was just right then to sell. You have
more wiggle room. You have more time to kind of
to adjust and make different plans. Because even if
That's
things
right.
change, you can even change the inventory stock too.
But
You
why
don't
would
have to
that
put
matter?
detached, right?
But let's say I did go into a 3-year project and some stuff does happen, like 2017, where the real kind of the top of some of the higher price projects, comes down a little bit. But then can't the project just be extended a year?
Yeah, sure it can. It can.
Okay.
But if
you're just going in thinking I'm going to be in and out. This is going to be quick, easy money.
Yeah.
It's maybe
That's
not
what
the
people
best
are
money.
looking for.
No,
Everyone
I know,
wants
I
the
know.
easy money, right?
I'm
But
always
think-
not. I'm
think
always
about
thinking long term and preservation of capital.
Yeah,
but
just
think about a 1-year time extension on a 3-year project. You've extended it by 33%
okay, good point. Yeah.
over a 1-year time extension, or even a year and a half over on 6-year project.
That's fair. Yeah,
It's a different. The quantum, like the impact, is a bit different. So look, short-term projects are great, as are long-term projects. But this is why I think, just like anything in life, taking a bit of a portfolio approach makes sense, because that way you're not vulnerable. It's not an all or nothing play.
Got it. Yeah,
right?
yeah. Okay. Something I'm interested in with what you guys see. Do you guys get any insight into how investors or people outside of Canada view Toronto? Like how? Because I think sometimes when I'm born here. Are you guys born in Toronto?
Yeah.
I am. Yeah.
There's
Oakville,
no
actually.
Oh
Is
my
Rich-
God.
Richmond
There's no
how?
Habs fans in the room finally? Every podcast I've done for the last 2 months, there's like a Habs fan.
Yeah, but he's a
rolling around.
Wings fan. So
You
you were born.
It's not
You
much
grew,
better.
No, wait a second. You did that swim race in Quebec. Were you there to watch a Habs game?
I wasn't. No.
Okay.
No.
All
Never
right.
seen a
We're
Habs
okay.
game. So
We're
So you grew up-
good.
how'd you
Dylan, extra points and
How'd you
cookies.
end up a Red Wings fan if you grew up in Oakville?
I was a big, grew up kind of in the dynasty era of Detroit, like Stevie
Yzerman.
Y.
So you were a
Shanahan.
bandwagon
Man,
jumper.
It's hard not to like
Yeah.
Yzerman.
Yeah.
Met Gordie Howe when I was a little kid.
It's like
Got
how
his
I started
autograph.
liking the 49ers because they were winning Joe Montana years when I was a kid, and they were winning Super Bowls. I'm like, oh, I like San Francisco because they're the champions, and that's the team I decided to like. Somehow I
But
still
that-
like them when these suck.
That also is a very
Convenient.
real indicator of his age, right? Because if he was any older,
Convenient.
he would have been a Leafs fan because Gilmore and the boys played on Leafs early
Gilmore,
90s.
yeah.
This means
Yeah.
that he was watching the late 90s when the
Yeah.
Red Wings just dominated.
Yeah.
Yeah,
everything.
yeah. Man,
Yeah.
I'm older than everybody
Gilmore.
here then because I like
we bring
Rick
Gilmore-
Vive. I'm like Rick Vive down the wing.
Can we
slap
bring
shot.
Gilmore back? I want to see him do his little spinorama behind the net again because we need that. We need the
could use that.
spinorama.
Don't even get me depressed. You're okay. Detroit fans are okay. Habs fans, we got to talk. But wait, where are we at? The developer of the project, the
International buyers.
Yeah, the international buyer. Yeah, how do people see things if you're not from Toronto? Because I feel like so many investors we deal with can't see the forest for the trees.
Yeah.
We will scream from the rooftop here, the population growth is insane. You know, you don't understand the long-term trends here, and no one seems to get it. What do you guys see?
Yeah, we see a lot globally. We have investors from probably 30 plus countries at this point, and so we have pretty good insight to kind of what other people are seeing. And I think when you look at the global picture, not that Toronto hasn't gotten more expensive, certainly it has, but globally, when people look at it as, where do you want to live and kind of all the quality of life factors that go in, where am I going to send my kids to school? Where is, there's so much uncertainty in a lot of countries these days, like whether it's political or, economic concerns or what have you. You look at Toronto and
There's just personal safety. sometimes.
yeah, it's a safe city. It's a great city to grow up in. It's, education's great. The banks are very stable. And it appeals to a lot of people. And then when you factor in that, it's not as expensive as London or New York or places like that, it's got a lot of appeal. And I think, in the last, call it 10 years or so, you've seen Toronto really, it's something that Toronto's said probably for 30 years, but really in the last 10 years, it's been true that Toronto has really emerged as a global city that people want to live in, want to be a part of. So it's not... You see a lot of stuff in the headlines about, foreign buyers and stuff like that. But really a lot of people that are buying or interested in buying that are originally from overseas have some sort of connection to Toronto, whether it's to come for school or to move. They're invested in living and being a part of Toronto.
Mm-hmm. Yeah. And on that point, you hear some chatter around the intergenerational wealth transfer from sort of the baby boomers to the next generation, and that's how some of these people are affording their homes in the GTA. And the same thing is happening from a foreign buyer perspective, right? So call it foreign buyer or foreigner perspective, I should say, where people from all these countries, China, Russia, like India, you name it, right? European countries, South American
too. I was going to say, yeah.
Yeah. They, for all the reasons that Dylan just stated, think that Toronto's in Canada, and then Toronto is a very attractive place. And so oftentimes they enroll their kids at school with the whole idea is not necessarily to come back to the countries that they left, but to now bring up the next generation in Canada. Right. And so this is a real thing that we see, like, a lot of our investors' families are doing this. So it's go to Waterloo, Toronto, wherever they're going to McGill, and then buy a house,
buy a property,
and then stay and work here, right? And so, obviously they're getting the same jobs we are, like accountants or whatever it is, so they can't afford $2 million houses. But there's this intergenerational wealth transfer that's happening in Toronto, but it's also happening from these foreign countries
where the
to
money's
Toronto.
flowing in here because they then have status in here. And I don't know if you guys know, I'm just pulling up this number for something we're putting together on Saturday, and the immigration target for 2018 was 310,000 immigrants into this country. That was the declared Stats Canada federal government plan. Yeah. The final 2018 population growth numbers for Canada came out, and Canada grew in population over 500,000 people, which already is a big number for this country. 500,000 people. Of that, 80.5%, approximately, I should pull up the exact number, is immigration. And if you do the math, it's 400,000 plus immigrants came in. The target was 310.
Yeah.
We overshot the target by over 100,000 people. I don't know who in the government isn't that good at math, but when you have a target of 310 and you overshoot it by that much, and then 43, somewhere between 40 and 45% come to Ontario. Right? So 45% of that come to Ontario. And then a huge a percentage of that comes to the Golden Horseshoe. We are just getting literally hundreds of thousands of people. Oakville as a town that we're sitting in here right now is 187,000 people.
Yeah.
That means this year we probably got another Oakville kind of landed here. And so, and then on to your student point, 300,000 student permits were issued last year. 300,000.
Yeah, it's huge.
Not included in the 500,000 number, right?
Well, yeah. No, because immigration was
so
400 and 300,000. Well, if it was, that means we only let in 100,000 immigrants and 300,000 were students.
Sorry. So right. So it's not.
So I mean, it's just an insane amount of population growth.
It's massive, and that a lot of our thesis is not built just around that, but in some ways it is, right? Like you've got the supply and demand side, you've got supply limited by, the planning approvals, all this stuff, but if you think about the demand side, so call those numbers what they are, and then just distill it down, and there's all sorts of, interesting tidbits. But if you just think about the number of units that our trades can deliver a year, right, in the Greater Toronto Area. So say there's 100,000 people, you need to deliver about 40,000 net new units a year. And those units would be either affordable housing, condo, rental, or detached home, right? Because you're saying on average 2.5 people per residency or whatever it is, right? So to deliver 40,000 units a year, we don't even have the trades necessarily to be able to do that year over year. Never mind if population growth is 35% higher than what we expect. So call it becomes 150,000, 130,000. Like our trades are limited, not to mention, land supply, the right units for the right people, affordability,
close to your job,
all these things, right?
Everything. It's to me, the next 10 years in Toronto is like this fascinating experience. There's one study that came out from Toronto said that by 2041 we're going to be short 220,000 household units.
Yes,
like to your point, 220,000. That's the same amount of household units in the city of Brampton.
Yeah.
So we're going to be short, like basically the city of Brampton in housing.
Short Brampton.
We're basically.
Well, if you look 10 years ago, like, because everyone, because I know when we were doing just simple rental properties, people were like, "What the value of this is? What it's I've been waiting to buy a house because it's going to come down," and this was 10 years ago, right? Yeah. So it's hard looking forward sometimes, but if you look back in the last 10 years, the same thing has happened. That's when it started with the immigration. We were having immigration before, but that's when it started ramping up. right? And that's what's caused a lot of what we've seen now with far prices and density. I mean, just driving along the highways. Just driving along the QEW, either from so we're in Oakville, so either going to Toronto or going to Hamilton. It doesn't matter which way you choose. The traffic now is noticeably different than it was just 5 years ago.
Now, if I get no traffic, I feel like I won the lottery. I'm like, oh my God,
I don't think it's possible anymore. Going east through Mississauga, there never used to be traffic going east through Mississauga.
No.
You know, it's Toronto. Now it's like all day, every day.
Yeah, and traffic jams start in the weirdest places. I used to drive. I actually played back in the day. This will date me for the Oakville Blades, which is a junior hockey team. And I used to drive from Richmond Hill 4 times a week. And that was the early days of the 407. No traffic. Zero.
Yeah.
Oh, yeah.
You might not have even seen another car.
Yeah.
There'd be
car.
stretches. It was just you, I'm sure.
Or I'd get on even any of the big highways and then, you'd be delayed for like 10 minutes. Now it's like, you just wouldn't do that.
If you
No
leave
kid would
without
do that.
Waze or Google Maps up, it's like,
Zero.
forget it. I'm not even getting on the road. So I didn't even
The
know
funny
which
thing
one.
about Waze too, this is totally sidetrack, is like, I feel like it's disrupted traffic patterns more than
Totally.
Yeah.
Oh,
Like,
yeah.
I got guys buzzing by my house.
Yeah.
Yeah.
There's a transport truck.
There's
in
a
the
lot of
street.
people on quiet streets now that hate Waze.
Yeah.
Wait a second. I can go down this quiet street and shave off 3 seconds off my
Yeah.
trip. Totally doing
Yeah.
it.
Exactly.
When it was small and there was a small number of people using it, it worked.
Yeah.
But now that everyone's using it,
Yeah.
everyone's taking the same crazy routes. It doesn't work the same
There's
way.
going to be another app like the anti-Waze.
Yeah.
Like here, everyone on Waze is going this way. You go this
Just
way.
stay on the highway. You're good.
Yeah,
Basically.
exactly.
I feel like that's what always wins anyway. Just stay exactly where you are.
Yeah.
But I wanted to mention one thing about the immigrants. I find
Yeah.
that Canadians always think that, who's coming into the country? It must be people with an education because we have a points-based system, and we do have a high quality of immigrants. But Darcy, to what you were saying, and Dylan, to your point also, is that I find when I talk to people new to the country, they say what you guys are saying. They're choosing Canada because they could go to other places. Usually it's Australia, Canada, Australia. Usually one other choice, maybe like a New Zealand. I feel like I'm forgetting one place, but they choose Canada because of safety.
Yeah.
Like they're never talking about, I have a university degree and I have a bit of money and that's why I'm coming here. They're always like, hey, it's safe for my family and my kids get good education and they have a chance at getting into university. Whereas if I stayed in India or China, they would have to be in school like 15 hours a day
For sure.
to try to get into university. Whereas here, I feel like they have a chance.
Yeah.
So that whole component I find is missed by most Canadians. They don't realize what an attractive place we are to people who are mobile, have a bit of money, and have some education.
Yeah.
And then what it does, and don't jump in, sorry to jump in there, is it sort of makes people feel uncomfortable because now the city that we grew up in and we expected to afford a detached home close to the city or whatever it is, like, is now becoming somewhat out of reach for people, and it just makes us unhappy and angry and saying there must be something wrong here. When the reality is all these things you're talking about is creating that, right?
Yeah. And as a politician, I'm like, the politicians must just actually love this because it's more tax dollars. People come in here. It kind of helps the economy. There's this awesome professor from Berkeley. He did a study that I'm also going to reference, Nick, coming up. And he did this study that said as a city grows, if 1 for 1 as a person or a family unit comes into the city and there is equal amount of housing growth, all the productivity gains from that economy growing is capitalized to the individual. Like the individual gains, incomes go up and that kind of stuff, right?
Sure.
And the individual grows. But if you enter a metropolitan city where housing does not keep up 1 for 1, all the gains are capitalized in the land. Because there's not enough land, so the prices keep going up and up. So as the new workers and family units come into that city, it's driving the land up so much that it's actually the landowners who really are benefiting from that growing economy. If the housing, to your point, how we can't keep up, and that's always in my head. I'm like, holy crap, man, this is a very interesting study, which means to me, for me and my family, selfishly, I should try to just get
land grab.
I should try to get as much land, my hands on rental properties, land developments. I mean, I know it's a selfish thought, but that's the way I'm thinking. Just because Toronto, the way it's kind of structured, is
well, if you look at the way Europe was built, like Europe, it's so much, it's dense, not as dense as some other areas. Right, but the way it was built is a lot of the land you can't build on and stuff. If you look at the winners, let's say over kind of like the last 20, 30, 50, 100 years in Europe, the landowners. If you owned land in Europe, so like look at Italy. If you had land in Florence that you could build on back then, how well are you now versus if you don't have land? And it's the same things happening in different areas in North America. It's like really no different. Because let's be honest, in Ontario, a lot less people want to move to Thunder Bay than live in Southern Ontario, where it's still like, it still gets cold, but it doesn't get as cold.
Yeah.
Right.
It's just really difficult for people to, with all the buzz and noise, for people then to have a long-term view,
Yeah.
which is what you need if you're going to be talking about like, oh, look what happened in Florence, right?
Yeah,
Yeah,
totally.
that's the
It's a
tough
good
thing.
point. Yeah,
Yeah.
yeah. You need to think long term.
That you got to look like
And
50 years out. You say, what would this look like in 50 years? Oh, wow. If it's like that.
And most
maybe I
people, to be fair, I feel like I'm older, so I think this way. It's like when I was younger, it was just about, hey, how much money am I making for my family? I'm going to get this house. Here's my mortgage payment. You're not thinking. It's after a little while where you accumulate a little money, then you can start
Yeah.
like thinking this way. Because I wasn't thinking this way
For sure. And
in
it's-
my like 20s and early 30s. It wasn't like going through.
it's
my
hard,
brain.
right? Like,
Yeah.
It's hard to get to
Totally.
save money to buy, right?
Oh my gosh.
Like it's very
The
difficult.
long,
No question.
it's hard to be long term on anything. Just the way we're wired, you want it short term on everything. I was looking up because I was taking a picture. So to the land topic, even the single family detached homes they're buying now, if they are the same size as they were, they're going on smaller and smaller lots. So a recent release in Oakville that came by my house, this flyer, 36-foot lots, 2,100 square foot homes. Whereas before, it was like 2,150. So 2,200 square foot home would never go on a 36-foot lot.
That was like a
40 was like
1,700
this-
square foot house.
Yeah.
1,400 square foot kind of place.
Right, so they're just shrinking, and that's just the width. I actually, because it was just a flyer, they don't give you the depth of the lot.
Yeah.
The depth is smaller too, because if you look at backyards now,
For
they might be
sure.
the size of this office. A
For
lot
sure.
of them, so it's smaller. Like some people are getting the same, and the starting price of those homes, 1.1 million.
Yeah.
It's in
The
it's
best
in
is-
Oakville, not even.
The
It's not in
best
Toronto.
Is if
it's
you
in
drive
Oakville.
our
It's probably
father,
one of-
our father's 79 years old, grew up in the drywall business. He drives around this new subdivisions going up all over Toronto, and he just points at all these houses going, garbage,
Yeah.
garbage, look at this garbage. He's like this old European guy where English is still his second language after being here for like 50 years, I feel like. And he's just insulted by these projects that are going up, you know?
I could, there is some, I could see that.
Yeah, totally.
Sometimes.
I feel like we should have to sell tours with our father, and you just go around with him. By the way,
Who's going to meet his criteria though now?
Yeah. Oh, nobody.
Yeah.
Oh,
yeah.
no.
No one.
You should
no,
hear
no.
the-
No, I just mean to go around, just hearing him go garbage and pointing at
Yeah,
these
yeah.
houses.
Well, you should hear him talk about the 20-foot wide lots in High Park and the value
Yeah.
of the
Oh, yeah.
homes on those. He's like, well, it just, and the townhomes they build like on top of the street, and he's like, how can people buy? It's just
I
he
have
doesn't
I
get
have
it.
a funny story to share about our father. That's him and his buddy used to hang out in High Park in Toronto, and they got into a fight. I guess they're both drinking. And our father, the story, the guy who my dad fought is I'm still like good friends with his son, and we always get the story interpreted a little differently. But the story from his father is that I fought your dad. And he lost $100 in High Park because it fell out of his pocket. Or no, our dad says it fell out of his pocket. He says that he won the $100 because he lost the fight. But apparently, this guy had a few beers and he walked home to his house, along High Park.
Yeah.
This is
Oh, yeah,
this
yeah,
is to
yeah.
your
No,
point,
I
just
know
how
this
cheap the
story.
houses used
Yeah,
to
yeah.
be when these guys came to Canada. That was like the burbs around High
Yeah,
Park.
yeah.
For
right?
sure.
He walked into his house. He was going up to his bedroom up the stairs, and some people were in his family room. And he looks over at them. He's like, what are you doing? Get out of my house, right? And he's going up to bed, and he didn't realize he was in the wrong house. No one locked their doors back then, right? So he just walked in someone's house. Can you imagine you're in your family room, you see some guy walking up drunk? Anyway, probably shouldn't be sharing these stories about our father, but that our father likes to share that part of the story, that he might have
That's
lost
hilarious.
$100, but he's the guy who went into the wrong house. Anyway, I'm way off track. What I wanted to share about Ontario was that we're also seeing it, and I don't know if you guys might see less of this because the developers you work with are just like really in the real prized pieces of land. We're seeing spillover effects. And what I mean by that is in London, Ontario, for example, we never used to do that much in London except for student rentals by Western University.
Yeah.
But we're all of a sudden seeing people in St. Thomas. Do you guys know where St. Thomas
Yeah.
is? Kind of just
Yeah.
outside London. We're seeing people buy properties in St. Thomas because London is getting too expensive, because people from like Mississauga and Milton are starting to buy like properties out in London. We're seeing the same thing in St. Catharines, where people from Mississauga, Oakville, Burlington are getting pushed out to buy in St. Catharines. People in
Yeah.
St. Catharines are now buying in Welland.
Yeah.
Yeah.
So
for
we're
sure.
seeing this weird thing that not only like our area is growing, it's pushing people over to these spillover places that you would never imagine that you see activity in.
For sure.
For the same reason, on Saturday, I pulled up some numbers. I found these awesome numbers around that. Toronto last year lost about 30 to 35,000 people to those areas in other areas of Ontario. However, so people don't realize it because Toronto's still getting busier and busier, and it's the international immigration that's been backfilling in Toronto. But the local migration trends have been out of Toronto into these areas. I have all these numbers around it. Like
London's taken off a ton. I go out there every once in a while.
So you're noticing it?
Yeah, my fiance's family's from there and grew up there and the whole deal. But it's grown a lot. Some friends that have bought houses and stuff, and even just they bought because it was affordable a couple years ago, and even if you were to go into the market now as someone right out of university or something like that, it's not as affordable.
Yeah.
It's gone up quite a bit.
And you know what, like we haven't gone as far as London, St. Thomas or
sure. I think
the
developers you're dealing with, they kind of do more right around.
Yeah, they do, but a lot of them are in Niagara, like down to Niagara,
KWC too, right?
Kitchener,
So we've invested pretty heavily in Kitchener, Waterloo, Cambridge. We have a pretty big development in Shelburne. So like these are areas that, may not be as far west, but like Shelburne's a good poke from core Toronto, right? And it's the same thing. Spillover effect, affordability, nice town, bigger lots.
Yeah.
You get a
Oh yeah, it's not 20 wide.
Lot.
Yeah.
It's not
But
garbage.
to that lot, yeah, God, it's not garbage. To that lot question, like it's such a multi-dimensional thing, right? Because developers want to develop to a margin, right? So whatever that margin might be, called 10% for that type of home. And in order to do that, you have to use your land appropriately, right? To be able to deliver a certain size house that someone wants to buy at a price point that works for them and for the developer to make their margin, right? It's not a one-sided thing. So there's that, right? So that's why these things have been compressed, because costs have gone up. So in order to make it more affordable, you need to build less square footage, and that might mean on less of a size of land. The second thing is that a lot of what's happened is been pushed down from the provincial government, right? So you've got this Ontario Places to Grow Act that has sort of redefined density targets in a lot of areas. So, areas like Oakville or Richmond Hill or, Markham's, which used to be what we know as suburbs and big detached home suburbs, are now being forced to intensify. So what used to be, 40 people per hectare is like the metric they use, is now 80 or sometimes 120. So they almost have to build what your dad thinks is junk, which are right on the street, townhouses that are 20 foot wide, because that's what the province wants, right? Otherwise, you're going to really force people to London, or if you have,
there's just not enough room.
There's just not enough room. So you have to build more density.
Yeah, I forget the numbers.
When you lay it out like that, it makes obvious sense what's happening. It's just the context that I have as a kid growing up. I see those developments. I'm like, what the heck is that?
Well,
but you're right.
For affordability, because
that's
of
right.
So yes, they have to.
Yeah.
But also if they
affordability.
keep, if they start just building 60-foot lots in Oakville at 3,500 square foot homes, how many people? If the 36 square foot lot is 1.1 because of the cost of land and everything, not as many people can buy them. Like it's not sustainable, right? But I think one of the misconceptions that we were speaking about earlier is so many people, they don't realize, like, the developers are making good money, right? Yeah. Like if you're a smart developer, you're making good money. Like no one's crying over the developers, but the margins aren't what I think a lot of people might think they are. For what the developers are making, because costs, like we're talking about land and all the municipal costs and the government regulation and that type of stuff, construction's all gone up. The margins, I think the majority of margins for developers, even as the prices have gone up and they've raised prices, I think their margins have shrunk from the numbers that we've seen, at least.
For sure. So that's one of the things is that, it's something that we're constantly wrestling with, is people are like, these prices are egregious. But costs run in line with prices, right? And so if you think about when you hit, something like 2017, your costs they trail pricing to an extent. And so costs are running up, prices are running up, and then prices hit sort of a point in 2017 and come back down. Well, guess what? Costs don't come back down as quick as pricing does.
Good point. Yeah.
So now your margins are really, really compressed. And so to your point, margins are down and costs are up. So it's not, yes, they're doing well. Back to even our earlier conversation, is a lot of the value has a lot of the upside in we call development, but there's a component of land development and then construction. The margin in construction is one thing, where most of the value has accrued is in the land, right? So where these big developers have made most of their money,
it's just the value
land
of
value over time.
Yeah.
You guys know where the fastest growing place in Ontario was last year?
Wait, let me guess.
Actually, fastest place in Canada. Sorry.
I think I know.
I should know this.
No, wait, I know the answer.
You
Is
do?
this Peterborough?
Yeah.
Oh,
Peterborough. Can you believe it? Peterborough. Now it's percentage based, right? So it is small, so it doesn't
Sure.
take as many
Yeah,
people.
yeah, yeah,
but I mean,
got it.
Peter, like, would you
I
ever
know.
think Peter? Maybe a
I know.
905 region, like closer to
Yeah.
Toronto, but Peterborough,
Yeah.
but yeah, number one in all of Canada, and by a chunk too.
You know what's up there too? And maybe you've looked at the stats more recently. Kitchener's way up there.
Yeah,
Yeah.
one of
Yeah.
one of the top 5. I forget, but it's all small. It's like Guelph, Barrie. It's all
Yeah,
these,
it's
these
where
places.
it's what
Exactly
we're
what we were
saying.
talking
To
about.
Dylan's
Yeah.
everything we're
point
talking
about people buying, your friends buying in London. I mean, that's kind of what's happening.
We're gonna have top 5 all in Ontario. Peterborough, KWC's number 2, Ottawa, Windsor, London,
There you go.
and then Kingston's number just a couple past that.
And I think all of those are cities or towns that maybe historically people have kind of thought of as, for lack of a better term, like B-level cities.
gonna
Oh,
say
But,
totally.
boring.
Yeah, yeah.
Boring.
but they're when you look at kind of what your options are, they're cities that have good job bases. We just did a project recently in Kitchener-Waterloo, and you see, they've got a huge tech hub there. There's education jobs. There's, and
Oktoberfest.
yeah, great Oktoberfest.
Critical.
So that's key. So from a kind of an equation in an average person's mind, you can still get a detached home for relatively affordable price. You can, it's a diverse job base, and that's why you're seeing a lot of these other kind of periphery markets grow quite a
Look,
bit.
we know people in buying these rental properties, these like a duplex or triplex down in Windsor and Sarnia, these small little rental properties, because the rents to the value of the properties are great from a cash flow perspective. The tenant profile is different. There's a whole different set
the
of challenges.
appreciation's not really there.
It's different, but yeah, there's it can make sense. The only thing to me that I think about with that, and it doesn't apply so much to some of these areas, but in the past, places like Windsor's and Sarnia's and those places, when the economy does turn, because it's inevitable, right? It can't just be this strong economy forever. There's ups and downs.
Sure.
Those are the places typically that often, when there's manufacturing problems or things like that, if China decides to, fluctuate their currency more and take more manufacturing, that's when they lose those jobs. There's like a stream of people leaving those places, as opposed to like the Greater Toronto Hamilton area. There's just more. It's just more sustainable there's more foundation still built.
Yeah.
The foundation's being built in those areas, but it's just not as strong as for obvious reasons, right?
Yeah, the diversify, like you need a diverse employment base, right? If you don't have it, and there's a shock to one or two industries that the town is relying on,
It hurts
you're
a
more
lot.
susceptible.
Yeah,
no
for
question.
sure. Remember Hamilton when the steel industry got hit? Now Hamilton's diversified
More
quite
diversified,
a bit.
yeah.
But when the steel industry got hit, what was that, 20 years ago now or so? Like it
took
it
20
went longer.
years.
Yeah, it took. You're right.
I installed an Oracle database right in the middle of DeFasco's, like, I don't know, whatever.
I can't believe you went into that area. I just drive
it
by
was a
there. I'm like,
shed,
what
and they were
goes on
playing-
in there?
There was like this IBM server that I had to go and install Oracle databases on, and it was like some expensive server. Like I'd never seen something so beautiful and so big in a shed that was like you would keep some crappy lawnmower in. There was like 3 guys in there playing solitaire on it. And I was like, "What is get me out of here! Like, what am I doing?" I thought this was like I worked in some tech company and I was super cool. I don't think I thought I was super cool. I just felt like that wasn't right what I was doing. But I just want to give you a stat that on Toronto, the top 3 cities in the U.S., New York, L.A., and Chicago, they make up 17.6% of the U.S. economy. So the GDP of those 3 cities. The top 3 cities, just to show you how we're concentrated differently, Toronto, Montreal, and Vancouver make up 35% of Canada's economy. But it gets crazier. Toronto by itself is 18.
Yeah.
It's crazy. Toronto by itself is the same percentage of this GDP that the top 3 cities are in the U.S.
Yeah.
Like our GDP is so concentrated right here. And I'm not even trying to say that's a good thing. I just mean we need to be aware of it. Right?
Yeah, I don't know if it's good or bad. Like I think it's probably good if you're an investor, right? A real estate investor in a way. In these
it's
areas.
very good if you're a real estate investor.
Yeah. but like that's why when we think about the Canadian real estate market, it's hard to paint a broad stroke, right? Like the media is like, well, Canada's overheated. Like that stat right there shows you that the market is separated. Canada, really Toronto and Vancouver. Now Montreal's emerging. We love Montreal for sure. But like in Toronto and Vancouver are very different from each other. Like the headline should be about the cities and why these certain cities are up or down, or why you believe that, not Canada broadly, because they're so different from the rest of Canada.
Yeah,
Totally.
Even beyond that, not even just Toronto, Vancouver, because just in Toronto you have Hamilton, KWC, we have, Barrie, like it's whatever, take your pick on these different areas, and for different reasons they might be stronger or weaker, but the population base here is so huge. What percentage is this population base of like Southern Ontario?
Golden
versus,
Horseshoe is about 9 million. We're a population base of 36. So what's that? 25% of the population?
Yeah, so probably more if you can include a little, even like the further areas too, right? Might be 25 to 30% of the entire country.
Countries here.
And over like the statistic over the next, I don't know, 7 years, 9 years, or whatever it is, expected to add 2.5 million people, or 2
I
million.
know the stat. It's 3 million people by 2041. From 2016 to 3 million.
Think about that.
43% increase.
Don't think about
to
that.
the
There's no
GTA.
roads. We need
if you
Elon
think
Musk's
about-
flying
no, but
cars.
No, this is a good point, because if you think about that, the Toronto population is 2.7 million, I think, right now.
Yeah.
We're going to add another Toronto by
Yeah.
2041.
Which, and
good luck with
2041 is
that.
not that far. It's not that
it's
far
not
away.
that far. I know, it's crazy.
Yeah, it's 20 years, man. 20 years isn't that
Dylan,
long.
when you talk to people about Kitchener, because you mentioned that you guys had a project out in Kitchener, do you have
Yeah.
to educate people on Kitchener, do you find? Or do people get it? They're like, oh yeah, university jobs, manufacturing, high tech. Or do you find you're having to educate them?
I thought going into it that we would a lot more. I think people were a lot more in tune with Kitchener than I
Okay,
thought
that's
personally.
surprising.
But
I thought Toronto people, if some of your Toronto core clients might be like Kitchener.
Well, I think a lot of people, especially people that are, obviously we're in Oakville now, and people that are kind of on the sort of west end of the GTA, like they kind of see both sides of it, right? Where they see Toronto that's really taken off, real estate prices have gone way up, condo market's been great. But then on the flip side of that, I think there's always, part of you that kind of looks out east or out west and, sees the option of having the detached home for the more affordable thing, what's out there. And Kitchener's always been a bit of a tech hub. It's gotten a bit more kind of diversified and taken off a bit more recently. So I think people have always paid a bit of attention to it. I think it's one of the ones not so dissimilar to Montreal maybe, where it's in the last little bit, it's had it's kind of taken off and gotten a little bit more recognition.
The secret's out. We've been talking about Kitchener for like over a decade now. I feel like it's finally out.
If you're on the west side, if you're on the east side, you might be thinking about other areas.
Peterborough.
Durham region.
Yeah, Durham.
Right.
Yeah.
And what,
But if you're in Durham,
but the 407 runs through like Brooklyn, Ontario. I think it's just north or right through
Yeah.
Brooklyn.
Yeah.
Whereas people in Oakville, you talk about Brooklyn, Ontario, they're like, what the hell are you talking about? And but you talk to people in Pickering about Brooklyn, they'll be like, oh yeah, it's right there. Right?
Mm-hmm.
So there's a little bit of that going on too, probably.
The east is, I know you guys are on the west side, and we try to invest in the west and the east, but the east is really interesting from a transportation infrastructure pricing. It's actually down a little bit from the west, like just if you try to do a relative distance and pricing and try and sort of make those match, the west is a little more expensive. And there's a lot of opportunity there. Like a lot of the big developers are in Curtis, Brooklyn. We're there heavy. I think we have like 7 or 8 projects there.
Awesome.
My theory on that was, and I don't know, because I never went back to actually look at the numbers, and this was before I really kind of started looking into real estate, but I feel like as Toronto started to grow, areas like kind of more to the west grew first. So like a suburb like Mississauga was one of the biggest suburbs, still is, right? One of the biggest suburbs. And the prices there started to escalate. And then it went kind of around, it went north and around, even Barrie, because Barrie the prices were so low that Barrie kind of exploded and stuff. And then over time, as those prices went up, people just went, they looked at Durham. Because for so long, Oshawa was like, oh, you live in the Schwa, right? Yeah. And then all of a sudden they're like, well, why don't look at the prices over on the east side? Why are we not moving there? Yeah. Like you said, similar distance, but the prices are lower. And then over the last, about 5-7 years, maybe 5-6 years, Durham's really got like really strong appreciation because of that. And I don't know, I never went back to look at like facts around that. That's just kind of what I feel happened.
A lot of it's probably transportation related a little bit too, like
that makes sense.
Like you've got multiple north-south highways now. You've got 407 extended to Peterborough effectively.
Yeah, the 407 was all west first.
And then now you have, what is it? Is it the
train.
425 or 412? What's the highway that goes from the 407 to the 401 now?
Yeah. 418.
Is it the 418?
Pretty sure
it's way off.
418.
Okay. So that's how much I know on that. But to your point, all that infrastructure is being built out now.
Yeah, absolutely. And like, GO train access is huge, right, for people. I heard a really random thing, and this is not empirically based. So it's just some kook probably told it to me.
We're
some
holding
nut
you to this.
job.
Yeah.
Whatever you're about to say, this better be right.
Bye,
We're
bye.
done.
But it makes sense. So I'm going to spit it. I'm going to throw it out there and say, is that almost every city in the world develops to the west before the east.
Oh, really?
And it's because, and a lot of the industry is on the east typically, it's because the wind blows to the east.
No
And so-
way.
Over.
If that's
This
true,
is what he said
that's
to me.
amazing.
And so
If that's-
anything being
That's
built,
crazy enough that I
anything-
might believe it.
anything being built, the nasty odors are, so no one wants to
Yeah.
live on the east because they
Yeah.
want to get the odor.
We're gonna have to look into this now.
But
If that's true,
Please
that's
find
that's
that's true. I'm
awesome.
going to the next city that's built. I'm just buying
Wait a
land on the
second,
west
though.
side. Whatever.
Wait a second. All the steel factories were in Hamilton on the west side.
either that's
Yeah,
the
but that-
stupidest comment ever made on the podcast,
no one
or one
left-
of the most enlightening.
But no one really lived
We'll follow up.
west of Hamilton,
Yeah, we'll have
right?
a
Everyone was in
follow-up
between.
to-
Yeah,
to
well,
that.
follow part 2. So, Darcy, can you come back talking about the way the wind blows again?
Yeah.
So, listen, we wanted to ask you a bunch of Greybrook stuff. We kind of got there in the middle of all this other
Yeah,
stuff.
sure.
Thank you for sharing so much. Is there some like obvious stuff that people ask you guys about Greybrook that we should be sharing, or did we get out enough that we did what we wanted to do? We didn't have really even an agenda.
I think one of the kind of big things on talking about all these different markets and, you know, what has impacted different markets, and we're in some other markets in the U.S. as well. We're in South Florida, Miami, Houston. It really is more so than just is the market up or is the market down, is building and developing the right product for the right market, right? So, you know, people in Durham are going to have, you look to Durham to live for a different reason than you look to Yorkville to live. And you look to the product type in Miami where, you know, you've got a high millennial renter base is going to be you're going to cater to that more than an area that maybe has a lower or an older demographic. So it's one of the big things, I think, just in general with real estate, and especially now as, you know, as the GTA has grown a lot more and has become kind of a much deeper market, is you don't see, to the point about areas like Peterborough and Oshawa and places like that growing so much in population, you really don't see as many kind of one industry towns anymore. So finding the right product to the right area becomes a lot more important.
So that's where the expertise lies. Never really thought about it. I always just kind of think, Peterborough, I don't know, build some houses.
The one
Well,
thing
that's the thing. Like, I think to Dylan's point is, like, you know, delivering the right product to the right people, is that there is someone that wants to live in Durham. There's someone that wants to live in Oakville. There's someone that wants to live in Yorkville. There's someone that wants to live in Toronto Waterfront.
Yeah, that's a
someone
good
lives in
point.
Miami,
Yeah.
right? And it's a different person, but at the end of the day, there's a product that needs to be delivered for that person because they're going to be buying there one way or another, right? So it's about, you know, delivering the right thing to the right person. And just because you don't want to live in wherever and I don't maybe want to live in wherever doesn't mean that it's not a good investment, right? Someone does want to live there as long as we're capturing them. You know, it's like we look at all of our investments like you look at your children. You treat them all equally. You love them all the same. So that's kind of our approach, right? And as long as you're in good areas with good macro trends and you don't over leverage and you buy well and you have great partners, then you should be okay.
You have how many young children? 2 or 3?
I have 2 and a third on the way.
Wow. So let's just extrapolate this out.
do you
How
really
old are
love
they
them
now?
all the same?
No, I'm just wondering what they're going to be able
So
to
far.
afford.
So far,
If in the
yeah.
last 20 years, houses have basically easily doubled in price, well beyond doubled, we're talking way more than doubled. Holy smokes, quintupled. So, how old are you? How old your oldest?
Turning 4 and 2
Turning
months.
4.
In
So
a
let's say
month.
he buys a property who's 24. Average house $1 million, so he's going to have to buy a house of $2 million.
Darcy's got to get busy.
Darcy, you better.
Oh, he's shoveling
you
every
better-
neighbor's driveway
You
already.
better help the wind blow some money into your house.
Yeah, you got to live on the east side.
I was trying not to
Dylan,
think about
I
that.
forget. Do you have children?
I don't know.
You don't have children. Okay, got it. So you're good. Your money's yours then.
Yeah,
You get to
yes.
keep it.
I was trying not to think about that, so I appreciate you bringing that up.
Yeah. For contact information for you guys, do we hand out that Rockstar email? Do we have what is the best contact information to hand out?
Yeah, probably. Like, I think that's, you know, it's a great relationship that, you know, Greybrook and Rockstar have had over a long period of time. You know, what you guys are doing here is awesome. So I think it makes sense to deliver that email address, which is
For sure, yeah. It's just rockstar@graybrook.com.
And that goes to either one of you guys.
Yeah, I'll be
Dylan
on
or
it.
Dylan.
Easier for people to remember than giving them my name to spell out. So yeah.
rockstar@graybrook.com.
Rockstar@graybrook.com. I think that's it. Nick, anything else?
No,
Guys,
that's it for me.
anything else?
No, appreciate you guys having us in.
Yeah, thanks for having
let's
us.
definitely follow up on that asinine comment, and we'll go. From
No,
there.
that's good. It gives
Yeah.
us a reason to follow up. It's great. I love those types of comments. Thanks, guys.
Thanks,
All right,
guys.
thanks.
Hey everyone, it's Tom Kratz again. So hopefully you enjoyed that chit chat with Dylan and Darcy from Greybrook. Good guys, as I mentioned. And if you are listening to this and you want to check out some real estate investing information for yourself, you can grab free copies of our books at rockstarinnercircle.com/books. That's rockstarinnercircle.com/books. You get access to all free copies of our books. Some people have paid good cold hard cash for copies of our books from Amazon. You can buy the books if you want to do that, but you can get free copies from our website. I always chuckle because there's a few people who came up to me and said, Tom, I never took you up on your offer for free copies of your books because I didn't understand your motives. And the motives are so that you know that if you enjoy the information in the books enough, we hope that one day you might reach out to us and we'll be able to work together and there'll be a business relationship between us. So that's the motives of handing away free copies of our books the way we do. So there you have it so that you know. And you can get those at rockstarinnercircle.com/books. That's it for now. Until next time, your life, your terms.